Good Monday afternoon to you. Welcome to the Jon Sanchez Show on News Talk CKOH. It's a pleasure to be with you and a pleasure to be with my brother, Dr. Dennis Sanchez, the AI doctor. How you doing, bro?
Woo! I'm doing great. How are you doing? It's Monday.
It's Monday. It's Monday. And you got to spend half your day sitting in a
Five and a
online
half hours.
5.5 hour insurance review course. Oh, I don't miss those days. I don't miss those days whatsoever.
It's coming back.
Yeah. Well, like I just said, you're going to be the smartest one in the firm when it's all said and done because I took mine I think it was 40 years ago. I took my insurance test.
A few things have changed.
Oh, just a few. Yeah. Don't ask me any health questions. Know the investment side of insurance, but yeah. Oh, that's crazy. Well, congratulations for making it through. You got one more to go, and then the big test on Friday, right?
We'll see. Really soon. Okay. Really soon. Maybe a week from Friday.
Maybe
but
a week.
I'm narrowing it down. Yeah.
I gotcha. Yeah, it's not like you're busy with a million other things we're throwing in your direction. Well, welcome, everybody. We appreciate you joining us. And let me tell you what we have lined up for you this Monday afternoon. When most people hear the words artificial intelligence, they think about the future. But as we all know, AI is already shaping financial well-being today. So what Dennis and I are going to be doing is we're going to discuss 5 practical ways that AI is already supporting smarter financial and estate planning, and how, used wisely, it can absolutely simplify decisions and strengthen long-term financial confidence, both for you, both for us as professionals, everybody. And I would say, Dennis, I guess I probably can't say. I was going to say, I know, that probably doesn't make a lot of sense. I was going to say, our industry, the financial industry, probably is one of the biggest adapters of AI, but I probably can't say that. You think so? Oh, am I okay on that?
I know, because looking at years, the sales were, for example, Microsoft was getting most sales. It was the financial services area and healthcare.
Okay. Yeah, I knew the healthcare
side
of it. Okay. Makes perfect sense. Well, good. Okay. So I did know a little bit of what I was talking about there. What, real quickly before we get into the stock market recap, talk to me a little bit about over your, 30 plus years in the tech industry before joining us. How do you see this changing, It's come about so fast, meaning AI, of course. It's come about so fast, really, in the last, it's 2 years where we kind of became familiar with ChatGPT. At least that's when I personally started using it a lot. But, thanks to you, we're integrating so many other areas outside of just ChatGPT into AI into our firm. But where do you really see this going down the road? Because, I'll be honest with you. When you sent me this topic, I'm thinking, this is a terrifying topic. I mean, I have said it. Every financial advisor has said it. We're all terrified that at some point AI could, like many industries, get us out of a job. But at the same time, I see a lot of flaws in AI when it comes to financial planning because I got the tech knowledge, but I have, more importantly, the real life knowledge. So it's not quite there yet for how we use it, right? But as you've always said, the best world, which is what we are doing at Sanchez Gaunt Capital Management, is incorporating incorporating AI and technology with the human intervention, right? I don't think, I know for sure at this point, it's not one or the other. You really have to do both. And I hope, frankly, that it's going to stay that way. But I'm curious of your opinion.
That's a really healthy way to look at it. And it's interesting because I've watched you grow so much in that space. But as you know, every time you turn around, there's an application in the industry.
Every time.
Now, even extending to the estate planning industry, where AI is doing its work. And what is it doing? It's actually doing a lot more than we've ever had access to doing before.
Sure.
And because it is available to everyone, all of a sudden, the playing field has changed. Everybody can get fairly smart with this information. But of course, it's the context of someone like you who's had the experience, combining that, all of a sudden working with a database about, you can't even imagine how large it is. Right. And being able to ask any question, and then how do you use that information, which you do so well? And I don't think you're intimidated by it at all anymore.
No, to be honest with you, my frustration is I wish I had more time to implement it because I know I'm just basically scratching the surface, and I know probably the same with Jason, and I know our staff. We're just scratching the surface. But again, it's literally is a full-time plus job staying on top of it. Folks,
Hmm.
I'll just tell you, I bombard Dennis and Jason and my staff with emails that I get all day long in regards to how AI is coming into the financial management world. And it's exciting. I won't say it's scary, but to me, I get frustrated because like, oh my God, that's a great idea. I want to implement that. Or that's a great idea. I want to research that further.
And I go,
I
time
mean,
out, time out.
yeah, time out. Yeah, exactly. And there's only, 15 hours a day that I'm working now. So I got to sleep a little bit and I got to eat a little bit. So I don't know where it's going to happen. But what I have learned, thanks to you, is don't get excited about anything. Right. The greatest new AI invention can come across my inbox as we do the show right now. And it would be foolish to really do much of anything with it. Right. Because what I'm noticing is so much technology is coming out, so many great, like you said, great programs and things. However, a lot of it is not proven. A lot of these are still very, very young companies. They have an incredible concept. Will it stand the test of time like other things that we've witnessed that have stood the test of time? It's anybody's guess. But I think, we've all agreed this is going to be an industry at some point that will consolidate, meaning the AI industry. It will be an industry that consolidates. Um, the big boys, a lot of the big boys are going to be the ones that are left standing like anything else. But, there's, as we all know, there's a lot of people becoming billionaires overnight that come up with a great idea. They take it public, and next thing you know, they're a billionaire. God bless those people. I hope they have great
Hmm.
success. But yeah, I would say out of everything AI related that we'll talk about, my biggest frustration is it does excite me so much. Just like you, how passionate we are about it, because it is opened up areas that I never thought possible, right? And again, I fully embrace it as our firm does. Like I said, I just wish there was a 48 hour was one day and not 24 hours, because it would be a blast. It would be a blast. This is probably the only time in my life, Dennis, that I can honestly say I wish I was retired, from the standpoint that I could spend all my time. Well, just I'm putting it with a caveat, just so I could spend all my time researching it. But then why would I research it if I'm retired, right? So yeah, oh well,
Well, our
we'll just go with the
father,
flow.
yeah, our father got excited about the technology like that when he retired.
Yeah, you're right. You're absolutely right. That was a long time ago. That was
Yeah.
completely different technology at that point. I remember when I bought him his first .com stock when late '90s, early 2000s, and he got pretty excited about that. So yeah, this is going to be a great topic, bro. I really appreciate you bringing it to the table. So let me get down to my side of the world and tell you what happened in this market. It was an interesting day today. It almost felt like a day of short covers. What I mean by that, so we had a pretty tough week last week. We had some good days, some bad days. Overall, the tone it was and the nervousness was there. So you roll into today, nothing really major happened over the weekend. Nothing. We had a few threats about Iran, and then those got calmed down today. But you really didn't have anything negative on a geopolitical front. I mean, Greenland, geez, they haven't heard that subject other than on the Golden Globes Awards. Where did you see that? Where that
No, I
comedian made
didn't.
fun about? Oh my goodness, yeah, a comedian made fun of Trump about Greenland, and then the Epstein files, and Trump pounded him on True Social and said, "You're going to be hearing from my attorneys." So that was about the last time I've heard. Yeah, I know. That was the last time I've heard about Greenland, and like I said, well over a week. So not that I watched the Globe and Globes, but it was all over the internet today. But yeah, so it was kind of a strange day today. Now we had tremendous strength in one specific stock, and that was Caterpillar. There wasn't any earnings, there wasn't anything. It's just the stock has been getting really hot, and then it'll get cold, get really hot, then really cold. And what I want to emphasize to everybody, Dennis, is this is a stock that it closed, and this includes some after hours pricing, $692 a share. Okay, so why am I bringing this up? This stock sits number two. I'm going through my list right now. This stock sits number two in share size, right only behind Goldman Sachs. Okay, so now why is that so very important? Well, the reason that is important, Goldman's at 946.48. The reason this is important, and I always like to bring this up to everybody's attention, and that is when you get these high price stocks. I'm not talking about high price from a valuation. I'm just saying they're pure dollar price. They have a major influence in the calculation of the Dow Jones Industrial Average. So remember, they take all the values of all of the stocks in the Dow Jones Industrial Average, right? They add them up. This is how the Dow is calculated. They add all those up, and then each stock has and I'm going to make it really simple, not to bore everybody, but it has a bigger or smaller influence on the calculation of the Dow based upon its price. So you take a stock like Caterpillar, knocking on the door of $700. You take a stock like I said, like Goldman Sachs at $900 and almost $50 a share. Those two stocks can have a significant impact. I mean, I'd have to look it up, but I'm just going to say Caterpillar, for example, it may now be influencing the Dow maybe 60, 70, 80 points, right? And same with Goldman
Wow.
Sachs. Right. So that's my point. Thank you. So when you see a big move either up or down in some of these higher price stocks, it can really kind of make the market go, wobble a little bit, right? Because it's so concentrated in those big name stocks. And then you go to the other side of the spectrum. You've got Nike at $62. Let's see, you got the company Dow at $28.95. So if we had those lower price stocks, at the top, let's say the top 10, but these bigger names, Cat, JP Morgan, Goldman Sachs, et cetera, at the bottom, that obviously would have a significant more impact than those lower price stocks at the top of the list. So, it's very interesting. So you get a big move in like today in the Dow Jones Industrial Average, where once again you had Cat way up there today. 5.1%, $33.55 gain. But I'll go to the second best performer, and that was the company Dow with a $1.40 gain. 5.08%, still big percentage gain, but only at $28.95. So, I mean, it has almost no influence in the calculation of the Dow Jones Industrial Average. And then, you look at Walmart up $123 and some change as the third best, and you go right on down the list. And that's why, again, this was a day that was very much swayed towards the Dow Jones Industrial Average, and looking like it was like, oh my God, this is a great gain. It was a great gain, but simply because some of the higher price stocks had pretty good days, and there's quite a few of the others that were down at the bottom of the list that didn't have much of an influence. Like the worst performer was Disney. That's $104.94 stock. That was down almost 7% today. So again, not much to balance out that big strength in Caterpillar. So there's a little Dow Jones Industrial Average strategy lesson there for you. All right. So anyways, it felt like a little bit of a short cover rally today. They saw the big move in Caterpillar. They jumped in there. They bid the Nasdaq up pretty good. Did okay on the S&P 500, but we were still sloppy in oil. We were still sloppy in gold. Some of those problems that weighed on us last week did not go by the wayside. But once again, everything was just focusing on just a handful of those big name stocks that really made the Dow do very, very well. So when we come back, I'll tell you what this market did. A few more movers and shakers, and then we'll get into our very important topic today: how AI is shaping the financial well-being. Let's turn it over to Kristen Snow, right now, Traffic Center. Hello, Kristen. Welcome back to the John Sanchez Show on News Talk 780 KOH with my brother, Dr. Dennis Sanchez, the AI doctor. All right, let's tell you how this market did finish up today. 115-point gain on the Dow, 1.05% to a close of 49,407. Nasdaq rose 131.56% to finish at 23,592, and the S&P 500 gained 37 points, or 0.54%, finished the day at 6,976, and the Russell 2000 had a solid 1% increase there. As we said going into the break, it was a big day with Caterpillar moving up very strongly, and major influence on the Dow Jones Industrial Average. And I want to remind everybody, Dennis and I were chatting about this during the break. I want to remind everybody, that stock had a pretty tough couple days last week. It really sold off after the earnings, but starting to come back. And again, that may be part of the short cover rally I was indicating earlier. Big boys shorted it, and it starts moving up a little bit today in a recovery mode, and then they have to jump right on board and start buying it to cover their short positions. So could be an interesting situation there.
So what's so special about what they're doing? I'm curious what Caterpillar's doing. They be in that position.
What are they? Yeah, that's a great question. What are they not doing? So why Wall Street loves Caterpillar right now, bro, is really simple. It's obviously it's AI driven. You may think, well, wait a minute, how's AI influence, sitting in a tractor? Well, we all know there's two factors. All right. Number one, to build all of these AI data centers around the country, what do they need? They need iron. Who makes the best iron, in my opinion? Caterpillar does. So you got a lot of sales, even though the numbers weren't all that great when they did release. Obviously, they're making a tremendous amount of sales of big heavy-duty equipment. But one that a lot of people aren't thinking about, and I covered this a few weeks ago when I was talking about what companies to invest into that are outside the scope of your traditional Oracles and Apples and Metas and those that are really involved on the software side. And so I named a lot of different things, and Caterpillar was one of those. And what was interesting after I did my research, they are a huge provider of generators Well, guess
Hmm.
what? Every one of these data centers have to have backup power because they
Yeah.
got to stay cool. And we know the great situation of our nation's power grid. So I would imagine Caterpillar is just selling a ton of generators. And again, these are the big giant generators. So I think that's their plan to AI generators and selling more equipment. Pretty simple.
Wow.
So they can benefit from different areas in the market. Housing market gets strong. Typically, you'll see CAT do well. But if you see slowdown in the global economies, because they sell a lot, of course, to emerging markets and things
Yeah.
like that, see a slowdown in those areas, then that affects the stock. So very, very economically cyclical stock. Very
Very
economically
cool.
cyclical. Yeah, there you go. Let's see. Let me hit some of the other big movers today. Walmart had a great day, up $4.92, 4.13% to 124.06. Costco up $28.11, 2.99%. Yeah, so we saw some pretty good movement going on there. Airlines were strong, which is surprising with all the storms in your direction. Dan.
Hmm.
United Air up $5.03, Delta up $3.19. But let's go back to some of the big tech names. Speaking of the AI space, now Apple had a monster day, $10.53 increase, a 4.06% to 270.01. That's ahead of its earnings numbers this week. Microsoft still struggling a little bit from the speaking of the earnings, it finished down $6.92. 1.61% to 423.37. And Nvidia did not participate today, slid lower throughout the session, despite a pretty good day for the chip makers. There was a battle going on this morning. I was thinking of you. A battle going on. We awoke to news headlines that they came out yesterday. I saw them yesterday afternoon, and that is, Jensen Huang and Nvidia, the CEO of Nvidia, said, "All right, we're going to kick in about $100 billion of additional investment into OpenAI, right, the parent of ChatGPT."
I heard
News
about
sources,
that.
yeah, you know where I'm going. News
I
sources
didn't
came
really
out
mean
today.
that.
Yeah, right. Yeah, there you go. News
I was
sources
just
came out and
kidding.
said maybe it's not going to be 100 million, and he came out today to save the stock a little bit. Jensen Huang. He didn't say we're not doing it, but he also didn't say they were doing it. And then you had another situation unfold, and that was Oracle. So you had Oracle come out. I'm going to glance over here, finish down, and this is after hours, also down $5.22 to 159.35. Oracle came out and said they need to raise about $50 billion of additional capital because they need more data centers. Again, you can kind of say, as I said on my stock update this morning with Ross Mitchell, you can say the glass is half full or half empty when a company says
Hmm.
that, right? The glass half full scenario is, hey, they got strong demand. They need data or data centers. The downside is, are they lacking capital? Is the coffer starting to get a little bit low and they can't, come up with 50 billion, which is really not a lot for a lot of companies. You'll never know. But obviously, investors today reacted to the latter, saying, not a good sign. They need to go out and raise that 50 billion. So we'll see on that one. But it was just, like I said, it was just pockets of strength, pockets of weakness overall. Let's hit the commodity side. Had some big movements, as I said here. Oil for the day was down $3, 2.19% loss. The day at excuse me, down. Let me rephrase that. Down $3. Finished the day at 62.17. Now my eyes were looking over at my gold prices. Down $113 on gold,
Keep your eye on the ball.
4,653.70. Yeah. So still have not rebounded from the sell-off that started last week. And then we turn things over to the bond market side. 3 basis point increase on the 10-year with a yield close of 4.28%. So again, normally you see a little uptick in bond yields, and the investors don't like that, but so I'm saying today felt just like a really strange day. I think tomorrow will be a good sign if we've started to recover from some of the big earnings sell-offs that we've seen in some of these major tech names. All right, everybody, you are up to date now. Let's get down before we go to break. We got a couple minutes before we need to do that. Let's get down to our topic this afternoon, which again, how AI is shaping the financial well-being for everybody, both professionals, retail investors, you name it, obviously being used very heavily in Wall Street. I saw a stat the other day, Dennis, that I'm sure it's somewhat AI related. Goldman Sachs now has more engineers than they do traders.
Yeah.
Think about that for a second, right? And I'm
Probably
sure
getting a better return on those engineers.
probably good point. I don't know. Goldman's got some really good traders.
Were
but
they
yeah,
human engineers
yeah,
or AI
they-
agents?
yeah, or AI agents or some of those
Yeah.
robots being created out there.
Wow.
Yeah, I don't know. I don't know. But what we're going to get into, folks, when we come back from the break is really talking about how AI is influencing retirement planning, risk management. This is a great area of AI. Asset protection, even how wealth is passed on to the next generation, meaning how it's being influenced in estate planning. So you may not see it quite yet in your lives. Maybe your financial advisor is using it, maybe they're not. I will tell you this before we go to break, though. The reason, I was asking you earlier how much our industry is using this, and you said a significant amount, and it's still very much of a challenge from a compliance standpoint. So, we're now registered with the SEC. They have very, very, very stringent rules in all aspects. AI is specifically one of those. We get updates a lot. We're all audited once a year by the SEC, and so we got an update a while back, not just to us, but it was just a general industry update, because they always post what they're going to be looking for when they audit firms like ours and other firms and the big boys, etc. AI was right at the top of the list of that, bro. As you all know, yeah, right at the top of the list. The bottom line is, I don't need to really get deep into this one, but the bottom line is what the regulators are looking at is that we, as brokers and financial advisors, are not using AI to make financial decisions. We
Hmm.
can use it to assist us in financial decisions, but and I mean, a lot of this you brought to our attention when you brought AI into our firm and some of your consultants, but they have no problem with you using AI, but you better document and you better have human intervention, and you better check, double check, triple check, and quadruple check if AI is making a recommendation, anything from your client can retire, or hey, this is a good investment, to anything along those lines. You better have human involvement, and you better validate that information, because we all know, I mean, we all run across this every day. AI by no means is perfect. It still makes a lot of mistakes. And especially when you get into things that really require human emotions, human involvement, that type of thing. So it's not foolproof yet. Please don't go out and type into Chat GPT, build me the best stock portfolio you can come up with. It's not quite there yet. But again, there's a lot of areas it does very well, and that's what we're going to enlighten you on. We're going to be talking about spending habits, cash flow patterns, debt structures, all kinds of great things with Dr. Sanchez. All right, let's turn it over to Jack Saban. He's got news, traffic, and weather. Hello, Jack. Jon Sanchez Show on News Talk 780 KOH, joined by my brother, Dr. Dennis Sanchez, the AI doctor. Once again, we had a great way to start the week and the month. Finished up 515 on the Dow. NASDAQ rose 130. The S&P higher by 37. All right, let's get into our topic, AI and the world of money, right? We know that it's been used for quite some time. We want to really get you into some of the nuts and bolts and the details of this. So, Dennis, let's talk, first and foremost about AI-powered financial planning and how it's making advice more personalized.
Well, if I was going back and remembering when we were doing it 10 years ago or 10, 15, I can't remember. We were so amazed. 20, oh, geez.
Yeah.
Seems like yesterday.
2004.
We were so amazed that we could gather information and then organize it in a way that we could create a reasonable plan, something that people could understand. And now it's evolved into being able to provide insight that something potentially an advisor may not see. And the reason is that the technology is looking at patterns and actually learns. We haven't had that technology involved in financial services before. We're able to calculate and balance and do things according to instructions. But now we're going beyond that, and it's learning and providing a different kind of insight.
Yeah, I think, looking at the financial planning software of today, that we use some of it, and versus, as you said, when you and I were working together in the financial services world 20 plus years ago, then it was more, we thought we were hot stuff because we could do what's called a Monte Carlo scenario. Remember that? Where you can go, okay, if inflation does this and the market does this, your portfolio should do this. I mean, that's still an integral part of a financial plan. But to your point, now it's more predictive. Now it's going to go back, because again, obviously we didn't have AI back then. So now it's going to go back and say, all right, if these certain market conditions or interest rates are here, inflation's there, if those things happen, here would be a great place to invest your money, right? Some stocks, some sectors, some funds, that type of thing. So much more predictive than reactive, I'd say, is one of the biggest differences that I see with, because all the software now has AI in it. It's all there.
And but the difference is, and you are the model of the perfect combination of experience and then somebody who understands the technology, understands how to balance it. It can save you so much time to get to maybe 3/4 of the way there.
Sure,
But then
sure.
what the this technology lacks is the context of what else is going on with that investor. Maybe something happened to them that night that would really change their whole
Mm,
outlook on life,
yes.
and it wouldn't show up in an intake form or something like that. So it would be the
Great
wrong
point.
information. So we're always going to need that human side of it to really balance it. You're a great example of somebody who's
Thank
figured
you.
that out.
Thank you. Yeah, no, that's a great point. I've never thought of it from that standpoint, but you're right. You can have the best technology, you can write the best financial plan, but there's nothing like if you're sitting across the desk or, camera to
Yeah.
camera and you see someone's emotions or they share with you information going on in their life that, like you said, is not going to be on an intake form or in a questionnaire. My gosh, I could do 5 hours of show of that scenario coming true. But for one, you may, your spouse may be in poor health, right? And you may have all the money in the world and you're happy and you think things are going great. But you know what? Life just changed. I have a situation right now with one of our clients. We were speaking late into the evening last week because his wife, unfortunately, has some health challenges right now, and he has to retire to take care of her. Right? That's something that people don't even think about. Right? Okay, maybe I planned on retiring 5 years from now, but now things have changed, different deck of cards, and I got to stay home and take care of my spouse. And then that completely changes the financial plan. You can't factor that into an AI written financial plan. You just can't do it. You have to have the human side of it.
You just brought up a really good point, which is how quickly, though, now we can adapt when those life changes happen.
Mm-hmm, mm-hmm.
Because in the old days, it would be, well, let's see, let me check my schedule next week. It'll take
Right.
me about a week to redo the plan. Now we have to do it in real time and
Yes, we
very,
do.
very quickly
Yes, we
because
do.
I believe with this client, they needed information. They need those
Mhm.
changes and stuff
Yes,
immediately. Not so
immediately.
it's kind of made it possible for you to do a better job
Yeah.
supporting your clients.
Yep, absolutely. So let's move on to our second point. I think we kind of touched on this enough. Again, AI financial planning, you got to have the human element side of it. Let's talk about the risk management decisions. This is a fascinating area for those of us that manage money.
So one of the great things that comes out of AI technology is the insight, as I mentioned, that you can get out of these analyses. And the difference is we've had technology for a long time that could, if you followed directions, could, for example, look at a huge portfolio and say, here's the mix and interpret it to a certain level very, very quickly. But now we're looking for things like exposures, being able to see that because you have history, you
Mm-hmm.
have all this incredible knowledge at your fingertips, especially these programs that are really designed specifically for those kind of routines. I mean, it's a life changer. It's a market changer, really,
Yeah.
to be
Oh,
able
it
to have
is.
that kind of insight. How do you use it?
In a lot of different ways, right? Our first and foremost priority for our clients is risk management, right? We don't shoot for the moon and try to make a 50% gain one year, but down 30 the next year. That's not our clientele. They want slow, steady. They want to know, and this is why, we've been successful, in my opinion, because A, we are there. We're always watching for them so they can go live their lives. We're knowledgeable with our 50 plus years experience. So we got a pretty good feel what's going on in the markets and the economy. We make our decisions, based upon that experience. And again, we have great connections, around Wall Street that we talk to all the time and kind of learn the institutional inside of what's going on. But really, bro, it comes down to once again, as you said, the risk management side of things. You now can use AI to go in there and do a full risk assessment. And what we mean by that, again, without getting too, as Jason says, nerdy, we can, and this has been around for years. We can look at the risk of a portfolio. Right? Real simple metrics is what's called beta. So beta will measure the risk of a portfolio compared to, usually it's the S&P 500. So a beta of 1 means your portfolio is going to go identical to the S&P. S&P goes up 10%, you go down, or you go up 10%. It goes down 10, you go down 10. You never want that, right? Otherwise, just go to roll the dice and put all your money on S&P, and you're going to do probably well over the long term, but what a wild ride it's going to be. So instead, what you want to do is you want to create a portfolio that has less beta. That beta meaning, maybe 80 or 90% movement of the S&P 500. But also you want to get into diversification. So AI and great financial planning software can go in there and crunch the numbers in a matter of seconds. What would take an analyst to do hours, days, weeks
Yeah,
sometimes.
yeah.
I mean, that was the part of this business I really did not enjoy before, growing up in it, is you have to do that analysis for your clients and for your portfolios. we still manage a lot of money in-house, and of course we have our largest amount that we manage on an institutional level with our institutional partners, and we rely upon them to do that, right? They've got the billion-dollar research budgets and things like that, and then we watch what we do. So again, we kind of call ourselves the manager of managers, but we still have a decent chunk that we manage in-house. So we create the portfolios, we measure the risk, we do the risk management, we do it all, and it's just a great balance for our clients. So it can be used a lot. I mean, you literally, and Lord knows we're not doing this, but you literally could put a portfolio on autopilot and have AI just tell it what you want it to do. Every Monday, I want you to
Yeah.
do a risk management profile. Tell us what the beta of the portfolio is. Let's do a sector analysis. Let's check what the diversification is of the portfolio. What's the beta of every stock? Do we have stock overlap if we own mutual funds? I mean, you let your imagination wander. You literally could throw it in. Now, how accurate it is, I don't know. I've never done that, but the technology's there to do it, and it'll only get better over time.
So
Let me add one more quick thing while I'm thinking
yeah,
about it.
yeah.
Here's the other thing that I want to make clear of everybody. And you may be saying, my gosh, I don't want my advisor using AI because it's inhuman, it's not perfect, that type of thing. As it gets better and makes our lives better, it's doing one thing. And any good advisor will tell you, once again, I will always be involved in the human element, even if AI is part of our practice. But what you need to understand, folks, is this: if we can free up our time to spend time with you on a one-on-one basis and talk to you about what's going on in your life and your changes and your emotions, things that AI never can do. Guess what? If we can free up an extra, whatever, 2 hours a day, 3 hours a day to spend more one-on-one time with our clients, that, folks, is why we got in the business, right? We love people. We want to help people. That's what drives all of us. It's not the money. It's nothing else. It's that love of just helping mankind and fellow humans. That, Dennis, is one of the major advantages of AI that we like, is it has freed up a lot of time. And also, for God help them, our staff, right? The ones that are so brilliant and doing all the paperwork and stuff. You brought in systems and things where you've cut down the amount of time it takes for them to open a new account, to transfer an account. I mean, all the really tough tasks that take time and energy. Again, look how much you've cut down the time it's taken them to do that. So there's a huge advantage how we use it.
How have you learned to manage all of that new information you have at your fingertips now? Because as we know,
I don't know.
It can
I
go
don't know
on
if I can say
forever.
I am managing it. I don't know. You know, I tell you what. Let's go to break, and I'll think of an
Think
answer.
about that one.
But yeah,
Okay.
that's a phenomenal question. It's
Okay,
turned
you
over,
got it.
man. You're turning me red on that one. That's a tough one. It's turned over to Kristen Snow right now, Traffic Center. Hello, Kristen. Welcome back to the John Sanchez Show on News Talk 780 KOH with my brother, Dr. Dennis Sanchez, the AI doctor. We've been talking about AI in our world, in the world of financial planning, portfolio management, etc. All right, throw your question out at me one more time,
Okay.
because you
I
blessed me.
know this insight that the applications, especially risk management, our AI is now bringing to the surface. And you have all of these metrics and things now that you can look at. How do you manage that? And how did you get to a point where you weren't so overwhelmed by it, where you just kind of sat there and didn't do anything? How do you make it useful?
So I think I've got one thing in my favor, and rarely in life do we ever say getting old is a benefit. But in this example, I'm going to say it's a benefit.
It's the only one
because
I've heard.
yeah, I know. Well, let me sell you on the idea of getting old, because you're older than me. And that is, you're so stuck in your ways, being in this business for so long. It's all I know. So you're so stuck in your ways, where you got to be careful, because you literally could turn a blind eye to technology, to AI, and say, you know what, I've got maybe another, whatever, 10, 15 years of my career, and I'm just going to continue doing it my way. That, to me, is not the right way to do it. The right way to do it is, and I'm not saying this to brag, is the way we're doing it, which is you've got the real life human experience, but yet we are wide open and we are adapting the use of technology in there. Like I said at the beginning of the show, my problem is I get so excited about it.
Mm-hmm.
My problem and frustration is I don't have enough time to really look into it. I mean, I've often thought we may need to hire someone, some kid out of college with an MBA or something, and you go, all right, Junior, your job is to do nothing but monitor all these emails that
Yeah.
John gets coming in and Jason gets, saying, oh, we got this new technology or that one, and go check it out. It's kind of like the needle in the haystack. And I mean, how valuable would that be, right? But that's, I just, ones that I think, like we'll talk about here in a second, like the estate planning side of it, ones that I think can tie into the industry. And most importantly, the first deciding factor that I look at if we want to explore something and I want to spend my time on it, or, Jason or our staff's time, is is it going to benefit our clients? That's all I care
Yeah.
about. If it's not, if it's of interest to John, big deal. I'll look at it on a Saturday morning. But during company time, I'm only going to focus on things that are going to benefit our clients, make us better investors, make them more money, protect their assets, so on and so forth. So that's kind of the filter that I use.
That's a great answer, and probably one that a lot of advisors need to learn.
The younger ones, yeah.
Because otherwise it's one tool after another. And going back to that healthy attitude that you have, I think I taught you it though, towards technology.
I know you did.
Because I've been around it all my life.
Yep.
It's going to be there. There are going to be new versions of it. But
Yes, indeed.
let's focus on the client and the human side of it.
As you were saying that, I had a flashback. I remember, when I was a brand new broker at Shearson Lehman Brothers back in the early 90s, I remember for like the first 3 years of my career, you're so gullible, right? You're in the big boys world now. And, almost every day, we had about 30 brokers in the office, and almost every day we would have a wholesaler come in in those days, it was the mutual fund company. So, from Fidelity or Vanguard, whoever, they would come in, they'd buy lunch for the whole office. We'd all, 30 brokers sitting around the conference table, they'd buy lunch, and then they'd give us their pitch, for an hour or so. And I remember myself and the younger guys, in my time period there, you get out of those meetings, you're like, all right, I'm going to go sell the heck out of XYZ mutual fund, the guy that was just there. And then tomorrow, here comes another wholesaler. You know what? ABC mutual, that's better than XYZ that we saw you. And so what ends up happening is you don't end up doing anything. You don't understand the products. And again, I think that just comes in as you mature and you get older and you understand this business and you realize that everybody's trying to sell you something in this business. And it's our job to say, okay, does it benefit? That's why I use that mantra. Does it benefit the client? Does it make sense? If so, let's pursue it, do our due diligence on it, and either implement it or not.
Excellent. Do I have time for a deeper question a little bit?
No, the music's playing. I'm listening. Barely I can hear it in my ear. So the answer is unfortunately no, but doggone it. We'll hang out. We'll hang out.
Okay. Yeah. We can keep it going next week too.
So for those of you that want to pick this recording up on YouTube, you'll hear this great new question that Dennis is going to ask. So give us about a half hour. It gets uploaded to YouTube, and we'll continue on. I'm nervous now. It's got to be that good that he wants to continue it over to YouTube. Anyways, God bless everybody. Thanks so much for joining us. Great job, bro, as always. We will see you tomorrow on the Jon Sanchez Show. Take care.
Good night.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.